It's interesting times for the asset management company industry, AMC industry, and that's because new products are in the offing. You had the regulator, Securities and Exchange Board of India, overnight or last evening, in fact, release the categorization or the classification of a new avenue of investments for investors. And this is called the Specialized Investment Funds. If you recall, last year a consultation paper was released talking about a new asset class, and now that has been distilled to be called now Specialized Investment Funds. It's an interesting prospect, and we'll find out what the industry thinks about it and what products could look like going forward. To talk about that and to talk about who should be considering investing in this, we've got Radhika Gupta, Managing Director and Chief Executive Officer of Edelweiss Mutual Fund, joining in. Radhika, as always, thanks so much for taking the time. And I remember that we'd spoken about this when the consultation paper was open, and you said that this is going to be an exciting space, both from the perspective of the manufacturer of these products as well as the investors. What are your initial thoughts on the classification that you saw? A lot of long-short options available.
So I think the classification is in line with expectations because, SEBI has really worked to co-create this with AMFI. And the idea here, I think the fundamental idea is to give access to manufacture products that could not be otherwise possible on the MF platform, which is why two of the categories, one is a multi-asset category and the second is the equity category, are focused on long short. Now, in a mutual fund structure, in a typical equity mutual fund, I can't do outright shorts. If I have a negative view on a stock, I can't express that. The use of derivatives is limited. So I think that has been enhanced meaningfully, and it's with the right intent, right? You've not allowed leverage, for instance. Exposure can't exceed 100%. So it's somewhere actually between what you would be allowed to do on a mutual fund platform and what you would be allowed to do on an AIF platform, but all for the better. I think it is very good flexibility.
Now, from the perspective of the offerings that are currently available, and you've pointed out the two options that I want to speak about, essentially, the category 3 AIFs, you would see a gravitation away from them likely into this new product, one, because of the kind of product that is being offered and the tax treatment. Would you agree?
Yeah, in part, I would say, and I don't want to sound alarm bells, but I would say that there are two parts to category 3 AIFs. They are more long only oriented funds and they are long short funds. I don't think this interferes too much with the long only category. I think this does potentially challenge the long short category because a lot of those kind of structures, 80 long, 20 short, etc., that existed on the category are now going to be offered on a mutual fund friendly format with a lower entry ticket size, which is 10 lakhs, as I understand, and with, if structured right, perhaps better taxation terms, which is the real big delta in my view.
Which is yeah, please go ahead.
So could it pose a challenge to Cat 3 AIF on the long short side? I would reckon yes.
Okay. So I'm trying to understand the kind of investor that you envisage will gravitate to this.
Yeah.
Are you talking about a mutual fund investor that has cut their teeth, that has established a certain scale and size, that is looking for perhaps a differentiated product, more aggressive product? Or do you think that a guy who, or an investor who is investing currently in a Cat 3 AIF that is looking for a better product in terms of tax treatment, maybe a larger size, I'm not sure at this juncture, would that be the kind of expectation?
I think so. I mean, I think you have both. It's certainly not a new investor or retail or small investor product, and the ticket size has been kept at that. So I think a PMS or AIF investor, an investor who was perhaps trying to do some hedging directly with F&O instruments, can turn to this, or a mutual fund investor who's seasoned, who has the ticket size and wanted a little bit more. I think in terms of investment profile and solution, what these two categories will give you, and we should talk about the third category separately, but what the long short and the multi-asset category will give you is more nuanced risk-adjusted return solutions. So Right now, you have more fixed income solutions, you have more pure equity solutions on the mutual fund platform. This will give you solutions in the middle of the curve. So I think for people who are looking for that nuance of risk adjusted returns, and of course, it depends on the products that the industry creates, this may fit that space well.
So, Radhika, I'm just wondering about how you think investors should classify risk here, right? Because going back to the point of mutual fund investors, just by dint of, and despite the correction that we've seen since September, by dint of investing consistently over a period of time, perhaps from COVID lows, you have a large number of investors that will have more than 10 lakh available to invest. So what should the thinking be, in your opinion, in terms of the risk involved in investing in some of these products?
So, okay, by the way, just because you have 10 lakhs to invest doesn't mean you should jump into SIF. I think even if you are going to start investing in one of these SIFs, and I've been the greatest advocate of Dal Chawal, it's going to be a smaller part of your portfolio. This is unlikely to be your core portfolio. So let's clarify that. I think to be an SIF investor, I suspect more 10% of your corpus will go into an SIF. These are new products. So you need to have a 1 to 2 crore liquid net worth to really start thinking about this. I think the way investors should think about risk, look, even on the mutual fund platform, hybrid products, which are risk adjusted return products, have been very, very popular. I mean, why do hybrid funds exist? They solve the purpose of risk adjusted returns. So if a long short fund, for instance, by taking 80% equity exposure, 20% short, is able to generate some alpha with 60% market exposure instead of 100%. Maybe the drawdowns are half of what market based products are. That is how investors should think about it. So, investors should think about it in terms of volatility drawdown. The reality is, not every investor can absorb a 30% equity market loss.
100%. And you've summed it up so beautifully. Radhika, so I'm not sure if I'm going to get the opportunity to speak to you next week, and I just want you to use this platform and this opportunity to ask you to send a message out to all of the women investors that are tuning in and that will tune in over the course of next week. Of course, I like to think that we should be celebrating women every day, but from the perspective of the upcoming Women's Day, any message that you'd like to send out?
Well, so firstly, happy, I am not here next week, but, wishing all of the women investors and employees at Profit a wonderful Women's Day. And I do believe it should be celebrated every day. I think the only message to existing women investors, I think the message is keep going. The fact that you've taken the step isn't in itself enough. And don't worry if you make mistakes, because I think with women, you make a few mistakes and you're dissuaded in your journey. I think this is a journey in which you live, you learn, and you get better. To people who are not investing yet, I think a bigger message, don't believe that you're not capable of doing this. Pick up small and get started, because this is not something to outsource.
Wow. Thanks so much, Radhika, for joining in for that perspective, and always a pleasure speaking with you.